Good afternoon, world. How's it going? This is William King, Director of Operations at Realty Group. I'm bringing you here with more solid real estate education. I'm the number one resource for all real estate needs and real estate education. I brought here today with me Charles Dumadiva.
Hello.
CEO, founder of Patriot Pacific Financial.
Thank you for the invite.
And then I also have Justin Collins,
Hello.
Director of Training at Atlas Realty Group. Today, we are going to talk about interest rates. Now, it's not sexy. It's nothing that people really understand, but we all know they're out there everywhere. But buyers need to know and sellers need to know what are interest rates, why they're important, and just give you a little wave top. Now, this video isn't meant to make you an expert on interest rates. It's just to give you the brief overview in the beginning to open your mind so you can then ask the right questions and put you in that learning quadrant of knowing what you don't know so you can ask the right questions to know what you want to know. Okay? So without further ado, Charles.
Yes, sir.
Let me ask you a question. Mm-hmm. What are interest rates?
What are interest rates?
What are interest rates? Why do we even
That's
have
a good question.
What's the point of
So
having an interest rate?
basically, the lender that's lending you, you're the home buyer, the lender that's lending you the money, they're in it for the money.
Yeah.
They're not in it for charity, right?
Nobody works for free.
Right, exactly. And so interest is basically how they profit from lending you money. So it's not an act of charity. Of course, we know that varies from lender to lender. It varies from loan type to loan type. It varies from loan size to loan. There's a lot of different factors, which we'll touch on, that can affect what that interest rate is. But the lender determines the interest rate.
But basically, interest rates is the cost of borrowing money.
It is. It's the amount on top of what you borrowed. If you borrowed $400,000, on top of that, what are you paying as a thank you for lending me money, enabling me to become a homeowner because I don't have $400,000 saved.
Yes.
So I'm going to go to you and go borrow money. It's that thank you that I don't know if you call it thank you, but it's the cost of being able to get what you want, which in this case is a house. Right.
Now, and Justin, are interest rates fixed? Like, how do you determine an interest rate? Like, if today's interest rate was 2.5, is that the same thing for tomorrow, or how does that work?
Interest rates change daily. You know, it's never really fixed. It depends on various amount of situations you know, in the market. Like you said, today can be 2.5, and all of a sudden we can have the market just hit, and tomorrow can be 4%. You know, those things happen just like before COVID. Before post-COVID, you know, before everything happened, interest rates were kind of typically around 4%, 5%. You know, people thought they were getting good deals. And then once COVID hit and, like I said, post-COVID, pre-COVID I meant before, but post-COVID, interest rates just dropped, and that's why all the buyers came out of nowhere. Interest rates went from 4 to 5 to 2 to 3.
Yeah.
You know?
Yeah, a lot of refinance activity as well that happened in 2020 because the rates dipped. I always, if I may just interject, I always have an answer to the world famous question, which is, you know, how or what is the interest rate, right? And I hate to say it, I'm not trying to be facetious, but I always liken it to, if you can see this on the screen, how long is a piece of string?
What string?
Right, exactly.
What string?
You can't answer that question. If I called you and I said, hey, Justin, how long is a piece of string? Or if I said to you, William, how much is a car? You can't answer that question.
No. What car? What color? What size?
You
what
have
string?
to tie it to
what
something
state?
else.
What zip code? Yeah,
Exactly. And I feel like we in the real estate industry, we as professionals have a responsibility to educate our buyers. You can't ask that question. What is a interest rate?
Yeah.
What is the interest rate for this scenario with these parameters, A, B, C, D, E, whatever?
That's more of an appropriate question whenever a consumer wants to know what they may qualify for. They need to come with some information like what's their FICO, how much they're trying to borrow, you know, where they're trying to buy. Yeah. And what's some of the factors?
Some of the factors that affect the interest rate. If you were a buyer that called in and say, "Hey, what's the interest rate today?" I'm going to ask you, "What's your FICO score?" If you don't know it, we're going to pull it. Right? What type of loan are you getting? Some loans have higher interest rates than other loans. Yeah. Government insured or guaranteed loans, such as FHA, VA, USDA, usually have better interest rates than conventional loans that are not backed by the government. The size of the loan matters. Right. So if you exceed a certain amount, we call it conforming. If you go above that by $1, your pricing could change.
Is that considered jumbo at that point? If
Correct.
You go over
High
the conforming
balance
limit?
jumbo, exactly. Okay. And then even the type of property affects the interest rate.
Really?
Yep. If you're buying a multifamily property,
just
2,
learn
3,
something
4
new.
units, or a manufactured home, most lenders are going to set that interest rate indicative, to use a fancy word, of the risk that they're taking on.
Okay.
So all of these things, you can't answer the question, what is a interest rate? What's the interest rate? If you ask me that question, I'm going to ask you 5 or 6 questions. But I'm not going to ignore the question. You need to know what is the interest rate.
Yeah.
And there's a couple of other things that come into play that we'll talk about too.
Now, Charles, I did hear that typically VA loans have a lower interest rate than if a military service member wanted to go conventional.
That is typically true. Sometimes the market is such that there's such an appetite for conventional financing that the conventional rates do catch up with the VA rates. But under a VA is under the umbrella of government insured, right? Or guaranteed. FHA is a government insured loan. VA is a government guaranteed loan. USDA is a government those loans typically have better pricing than a conventional loan.
Now, when you say pricing, so that means the interest rate costs money?
Great question. Although, and a very loaded question.
So wait, I thought you just said the interest rate was the amount of money we're paying, so we have to pay for the rate.
So here's the thing. If you were to come to me and say, hey, Charles, I am William King, I want to buy a house, I'm going to tell you that you get to select your own interest rate.
Nice.
You get to pick your own rate.
I want a 2%. Yeah.
And you might be able to get it.
Yeah.
The thing is, I have to share with you a grid. I don't have to, but I do. A grid of each interest rate that's available for that loan scenario and tell you, okay, Mr. King, do you want to buy down the interest rate? In other words, you're going to go this other direction where you're going to put more money out to buy the interest rate down, i.e. points, which is going to raise your closing costs. And hey, if you've got the wherewithal to deal with that, good for you. Knock yourself out. Of course, you got to do an analysis. Is it worth me paying all this extra money up front to buy the interest rate down a quarter point or whatnot? But that is an option. So you come to me and say, hey, I want to buy a house. What are my interest rate options? I'm going to tell you, you can select your interest rate. And here's the options. Option A. Am I going into too much detail here?
No,
you're good. This is great information.
Option A, you get to buy it down. So you're adding to your closing costs. You're increasing your closing costs. Someone's going to pay for that. If it's not you, who is it? Is it the seller? Option B is you're going to take the interest rate that's not going to cost you anything to get that interest rate, but you're also not going to get any help from the lender. What kind of help am I talking about? Option 3, you might say to the lender, hey, this house I'm buying for $450,000, closing costs are, let's just say 10 grand.
Right.
I don't have 10 grand to spare. So can you, lender, please help me with covering those costs? We're going to go to the computer and go click, 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 and we're going to come up with a grid. As a matter of fact, on the screen right now, Jaime is showing, Jaime's our rock star videographer, by the way.
Hey,
Jaime is showing the grid. And this is an actual example, if I may go into some detail.
Go ahead.
This is what you're seeing right there on your screen is an actual example from today, September 28th, 2021. We picked an imaginary VA buyer. Now, this gentleman happens to be a veteran, so he would be a VA buyer.
Hey, I'm buying a house, y'all.
We picked a 680 FICO score. I'm sure your FICO score is a lot higher than that.
Yeah, it's higher. It's not higher than that.
Hopefully.
But gonna go furniture shopping last night. And as you can see, okay, what is par rate, right? We talked about buying the rate down, paying money. If you look at the screen, you could potentially pay 1.517 points, it's a point and a half, to buy your interest rate down to 2.125 30-year fixed. Okay.
And how much money is that?
On a $450,000 purchase price, that's almost $7 grand.
Okay.
So on top
you can go down
of
to 2.1 for $7 grand.
Today's pricing.
Yeah,
This is
today's pricing.
One example.
Based on this scenario.
Exactly
This
right.
scenario.
The scenario on the screen is $450,000 purchase price, VA buyer, 680 FICO score. Now, that same buyer could say, I don't want to pay points or whatnot. I just want the best interest rate without me having to pay anything. And as you can see on the screen, that would be 2.375.
Wow. See, a lot of other, I'm not going to name any names, but a lot of the banks, they've been saying for, FICO scores that's above 700. I've had a scenario where the VA buyer is 600,000 purchase price, FICO score over 800, and they're at a 2.75. What's the difference? Why do banks have different rates? Do everybody charge different, or how does that work?
This is a sensitive topic, and I don't want to get shot. But I will say this.
Charles, let me see if we got the best rates. I will say it.
I'll say it as well.
Banks can manipulate their margins.
Yeah.
That is their God-given right in this capitalist free enterprise country that we live in. Good for them. You might go to Walmart and buy a microwave for $80. That same microwave might be selling at Target for $85.
Right.
Facts.
That's okay.
Yeah.
And so certain lenders, certain banks tweak their margins. And so today you might get a 2.375 here. You might get a 2.875 somewhere else. But going down that road we were talking about.
Yeah.
If you said to me, hey, I don't have 10 grand to cover my closing costs, but I really want that house. And my realtor, William Kim's got to get paid.
Yep.
Here's an option looking at it on your screen, right? So if you were to pick 2.65 today, you got $9,221 in lending credit that we're giving you. Now, we're not adding that to the top of your loan. I've had buyers, veteran and civilian, and realtors misunderstand that concept and think, oh, we're going to add $9,200 to the loan amount. No, we're not. We're not.
Just handing you.
We are. So what the lender's doing is they're giving $9,200 in lending credit for tweaking the interest rate. Not even, what is that? Not even 3/8%.
Yeah. Not
crazy.
even 3%. And you're gaining $9,000.
Now think about it, right, Justin? If I said to you, hey buyer, I need 10 grand to close the deal, and you bring that 10 grand out of your pocket.
Yes.
What you've really done is you've taken 14 or 15 grand that you earned in your job.
Exactly.
Got taxed on it.
Exactly.
And then brought the 10
to the table.
It really cost you more. Right?
Yep.
Is that fair to say?
Agreed.
It's not tax-free money.
No.
If you, for every dollar that you got, that dollar arrived after someone else took their portion.
Exactly.
Federal, state, Medicare, OASDI, Social Security, whatnot, whatever you got going on. A dollar is really about $1.50, maybe $1.60. For some people out there, it's close to $2.
$1.85. Yeah.
So when you say to the lender, hey, I'm going to get help from you rather than dip into my pocket, there are some advantages. Now, let me show you on the screen real quick. Can I keep going?
Go for it.
Go ahead, Charles.
The difference between the 2.375 and the 2.65 interest rate, and you get $9,200 to close the deal, in payment is $65 a month.
Okay.
I know you're going to go out and have dinner sometime this week and spend at least $65. You're going to
over $65.
Over 65.
You're going to spend over
$65.
Yeah.
$65 a month difference to not have to come out of pocket 10 grand. How long would it take you to recoup that? 141 months before you would say, now I'm paying too much. Does that make sense?
Right.
So I took $9,200. My payment went up $65 a month. I can afford it. In 141 months, which is about 12 years, I think.
Yeah.
Yeah, about 12
It
years.
took that long to recoup that. Is that a good deal? Seriously.
That's a phenomenal deal.
But it also depends on how long you plan on staying in the property as well. If you plan on staying there for 60 months, you're like, hey, I just got my closing costs paid for free. I never had to pay that back.
Exactly. So the argument, to answer the question in kind of a roundabout way, you always have the ability to select your interest rate as a buyer. The lender doesn't have to force it on you and say, hey, that is your interest rate. No, the lender should be showing you a grid. Hey, pick your rate. Do you want to buy it down with points? Do you don't want to do anything? Just leave it at midpoint, which is par, or do you want to go get money to help close the deal? And you guys know, as realtors, more than I do, in this environment, sellers are not typically paying.
They're not giving credits right now.
So the ability for a buyer to engage a lender that can offer this, huge ramifications.
Yeah. And every lender can offer that. It's just a matter of if they give the information to the buyer, right?
I'll say this. Hypothetically, every lender can offer the concept of,
the concept.
Here's the interest rate. The problem that we're running into is, without naming lenders and not bashing anybody, everyone's got their role in this industry that we're in. We're all in it together.
I love everybody. Want everybody to want everybody to
love.
And sometimes on any given day, one lender is going to outdo the other, and the roles are going to be reversed the next week.
Right.
So, but it is a reality. The buyer needs to look for the best interest rate because lenders tweak their margins. And so you might call, XYZ lender, and they might tell you, 2.65, we're not giving you any lender credit. And lender ABC over here saying, we'll give you $9,200 lender credit. That's a huge difference.
That's a huge difference.
You get to choose.
Now you as a lender, you allow the buyer to see the grid, to see the rates.
We are transparent. We'll show it to you.
That's good.
And
That's
not
great.
only that, but we have, as a broker, we have access to 30, 40 different lenders. So we kind of scan that grid every morning.
Oh, so that's an advantage you have over a lot of the competitors.
We're not selling just one bank's set of figures.
Yes.
Because what if that bank had, inadvertently tweaked their margin and it wasn't so great for the buyer?
Makes sense.
We're going to look at what's more competitive.
Good.
So, yeah, I mean, interest rates are a big, big topic, and you just have to be educated and as a buyer and really make sure you're getting the best deal.
That's good. So I have a question for you, Charles.
Yes, sir. Mm-hmm.
So in that scenario, 450,000. Mm-hmm. So as we know, interest rates change daily. And as we talked about, like pre-COVID and post-COVID, how the interest rates dropped. So if a buyer's on the cusp and the buyer, we talked a lot about this in our other videos. If a buyer wants to wait, I'm going to wait.
The cost
6
of waiting.
months. Yeah, the cost of waiting. I'm going to wait. I want to wait till 3 months. You know, I have a buyer situation looking for houses. They're not getting the deal done because it's a tough market. You know, situations they don't have as much money in the bank, like we talked about seller credits.
Sure.
But they want to wait. So right now, you know, we're at par today. They have good credit. We're at 2.5. They have $450,000 loan. They're looking for a 3.2. As we know in Marietta, it's plausible, but 450 is on the lower end for a 3.2.
Yeah.
So today, 2 days from now, the interest rate spike about 1.5%. How does that affect their loan amount?
You're looking at adding, again, I'm going to guess because I don't have the figures in front of me, but you're
This is an educated guess.
20, 30 grand to your cost of owning that home.
Okay.
If not more, because you look at the long-term interest, if your rate went up 0.5 point, or God forbid, a whole point over the life of the loan, which nobody really stays in a home 30 years, right?
Right.
But
It's
10
rare.
years is more feasible now, 7, 10, 12 years, you're adding 50, 60, 80, 90 grand to your expenditure.
You said the word point. What does point mean?
1 point is 1% of the loan amount.
Gotcha.
Okay.
So if your rate went up 1%, you know, 1%. So my recommendation to answer your question, which I think is what you're asking, does it make sense to wait? Sometimes, yeah, but hardly ever. Because if you look at that chart historically, since 1948, post-war, when they started tracking home ownership and values and whatnot, right? Whenever it dipped, it still went back up.
Right.
Overall, it kept climbing. It's never just plummeted and kept going down.
Yeah.
Rents are going up. What does that tell you?
I know. I will tell you,
Consistently.
I will tell you, rents had never went down.
Never.
Ever. I can't name a time in history where people say, you know what, rents is decreasing.
And if you think
can
about
tell you
it,
that.
we've got more population now.
Right.
Right. Tomorrow we'll have even more population.
Exactly.
Right.
Every
And
day
so
we're growing.
You got more of a pool of buyers competing. If you're Johnny home buyer, it's not just you. There's hundreds of others that are going after that same house. You can't look at this going, I'm the only buyer that sell. No, the seller's got lots of options.
Correct.
And so if I may add this, you know, I'll tell you, I've seen, sadly, many, many times in my career where a loan was affordable for a buyer, the payment made sense, and they wouldn't do it because they got hung up on the number in front of the interest rate percentage sign. It was a big hang up in their head.
Wow.
They felt like it was some sort of, you know,
Somebody trying to get them.
yeah, you know, it's what's the word? I can't find the right word, but it's sort of like I'm not significant because I'm getting this 4%.
Yeah.
And I try to tell them, like, what you're really getting is the ability to build equity over the next 3 to 4 or 5 years.
Exactly.
Let the lender take what they take if it's fair.
Yes.
Yeah.
Right? They're the ones lending you the 450, taking the risk.
Yes.
And you're hung up over that interest rate sign. If it makes sense, you can afford the payment, pull the trigger.
I agree.
The last thing I want to ask you before we wrap this up, what's the difference between interest rate and APR?
Okay, so back in the 70s, the feds figured out that a lender could cheat a buyer by quoting an interest rate that was very attractive, but not showing that buyer what the true cost was
Over the term of the
short-term and
loan.
long-term.
Okay.
Okay.
The points and fees charged up front. I might say to you, hey, I got a great 2% interest rate. It's going to cost you $25,000.
Yeah.
You know, and this gentleman might say, I've got a 2.375. It's only going to cost you $3,000. So the APR was basically put into place to find a, a standardized, that's the best word I can find, way to compare. Compare. And so we look at certain fees that are selected and they go into the APR calculation. And so the APR is a standard way of comparing each offer.
Okay.
Is it perfect? It's not. It's flawed because I got to be honest with you, lenders can manipulate what they put into the APR calculation. Nobody wants to talk about that.
Right.
The feds need to deal with that sometime. Now, if it comes up in an audit, they're like, hey, you included that. Well, you didn't include that as a PFC. You should have. Oh, whoops, I won't do it again.
Okay.
You slap on the wrist.
Now, for a lot of veterans, we deal with a lot of veterans in our community. Within 50 miles, we have about 5 military bases. Okay. They're typically here 3, maybe 4 years. How important is it for veterans buying homes today that's going to be for 3 to 4 years to understand their APR?
I would say it's very important for any buyer, irrespective, because you don't want to be taken.
Right.
You know,
Yeah.
you don't want to be taken with, for example, if you're taking out a 2.5 interest rate, your APR should really be below 3%, in my professional opinion. And that will be a reflection of what fees are being charged on the loan, right?
Right.
It's extremely important.
So an APR is just a reflection of what fees are being charged on the loan.
Of the cost of the
and
loan.
they tell you the cost of the loan over
Exactly
the
right.
actual maturity of the loan.
Exactly right.
Understood.
And if you look at that closing, the closing is kind of scary. I think it's page 4. It tells you how much interest you're going to buy that house twice over.
Right.
You know, you borrow $450, you're probably going to pay back, I'm guessing, $800, whatever.
Yeah.
That's the reality of it. You know.
And that's over a 30-year period.
Yes, sir.
Okay.
Mhm.
Cool.
And you can do something about that. You can make biweekly payments. You know, if you look at a biweekly calculator, if you are going to be in that home for 30 years, which probably unlikely, you can shave 8.2 years, I think it is, off the term just by cutting that payment in half and making it twice a month. Now, you have to be careful how you do that because the servicer collecting the payments could screw that up, and I've seen that happen.
Oh, right.
But you could pay off a 30-year term in 21.9 years without a nickel out of your pocket extra.
Just by cutting the payment in half
Yes,
and
sir.
paying every 2 weeks.
Bi-weekly, yeah.
Oh, wow.
Of course, you can always, put additional principal payments as well, and by doing so, you lowered the amount of interest the lender has
to collect.
off of you.
Yeah. By making extra principal payments.
Exactly.
Understood. So you can make different types of payments on your loan.
Sure can.
Because the mortgage consists of the principal, interest, tax, and insurance.
Yeah.
And you can make a principal-only payment or interest-only payment.
Exactly.
Understood.
Exactly right.
It's good information.
Yeah.
Good information. Well, guys, I hope you guys just got a little bit smarter. Now you know the right questions to ask when talking to your lender about purchasing a home. You know the questions to ask your realtor when talking to them about purchasing a home. Hey, what's my interest rate? That's a question that I'm going to ask you 5 questions to that. Okay. The best thing to do is consult your loan officer professional and ask the right questions. What's today's interest rate based on this loan amount, based on this FICO, based on what's another factor?
Type of loan.
The type of loan.
And the type of property.
The type of
Are you buying a condo? Are
Something
you
new
buying a
learned.
manufactured home? Are you buying a multifamily?
Yeah. Thanks, guys. So do me a favor, like this video, share it, comment. And the more people we educate, the better off we are as a veteran community. Charles, Jesse, thank you guys for your time.
Thank you.
Thank you, William.
Appreciate you guys.
Yeah.